Hey, what's up all of you beautiful subscribers? Welcome back to the Chapple Show. So what we're going to be talking about today is Alibaba, specifically a company or stock breakdown. I haven't done one of these in a long time, but this was a very special case because Alibaba, kind of a special company right now. That's what we're going to talk about. So let's get started here. If you don't know what Alibaba is, I'll explain it pretty quickly. If you're an average person, the quickest way to explain it is Alibaba is essentially the Amazon of China. That's what it is, Amazon of China. It's actually quite different, but that's what a lot of people in the media say it is. Just the Amazon of China. It's a giant. It's the biggest e-commerce player in China. However, they have a lot of different branches of e-commerce, which we are going to get to in a second here. So we're going to talk about the first one. So Alibaba, I'll just do this quickly, connects B2B. So Alibaba is a B2B website. What does that mean? It connects businesses with businesses. For example, let's say you wanted to sell 500 hats on Amazon. And so what you need to do is you need to get the hats manufactured somewhere for cheap and then sell them for more on Amazon. That's how businesses work. If you're going to try and find a hat manufacturer in like North America, they're going to be pretty pricey. Maybe you can get a hat for like $9 a piece, $10 a piece, $15 a piece, but the cost of labor and the cost of materials is much more expensive in North America. So what Alibaba does is they generally connect manufacturers in China to businesses in North America for the most part, and businesses in China as well, and all around the world, Europe. But that's what Alibaba does, is it essentially connects Chinese manufacturers with business owners around the world. Pretty big site. That's where the meat of their company is. But they also do a lot of other things too. So they have AliExpress. AliExpress is very similar to Amazon. Oh, that is bad S. But they're a B2C. This is one of the business, it's essentially just a retailer online, AliExpress, so you can go and buy stuff from China on AliExpress and around the world, usually at a little bit of a cheaper price. Shipping is kind of slow, but they're just an online e-commerce retailer. That's what AliExpress is. But Alibaba is not just like Amazon. Amazon owns, Twitch and a bunch of other companies, IMDb, Zappos. They own a bunch of other companies. So does Alibaba. We're going to get to that in a second here, but this is kind of part of the meat of their company. But we're going to keep moving on here. So Alibaba has a market cap, so meaning the valuation of Alibaba is 377 billion. I was going to say million. That'd be quite a deal if it was 377 million. But as of right now, it's about $377 billion. It was worth more a few months ago. A lot more a few months ago. We're going to talk about that in a second. So comparing this to Amazon, Amazon is worth about 900 something billion dollars depending on the day. So Alibaba is, about 40% roughly the size of Amazon in terms of valuation of the company. But in my opinion though, the market cap, so the valuation by the stock market for these two companies, it doesn't exactly show the value for the most part. For Amazon maybe, but I think Alibaba is worth more than that. And I'll talk about that. Again, I'm going to cover a little bit more of this as we go along here. But in my opinion, Alibaba is worth more. And also, I guess I should mention too, is what's kind of funny is that a lot of the stuff on Amazon, I forgot if I mentioned this already, a lot of the stuff on Amazon that you buy on there from third-party sellers, which is about half of Amazon products, they are from Alibaba manufacturers. So, actually, as Amazon grows and grows its third-party seller business, so does Alibaba. Alibaba gets more business customers from Amazon. Interesting, right? So they're tied together a little bit here. All right, we're going to keep moving along here. We're going to talk about their annual report. So now we're going to do a little bit more of the company, essentially stock breakdown here, and the company just full financial breakdown. So Alibaba's revenue in 2017, so 2017 revenue, it was about 40 billion, but we're going to try to be exact here. 39.9 billion US dollars. 39.9 billion, which was a 58% increase from the year before, and revenue is actually going up this year too. Revenue is still going up, but the stock is going down. Interesting. That's usually not how it works. So the company's still growing very fast paced. For a giant company with 58% growth, the stock should be shooting to the moon. For the most part, in my opinion. So, and this isn't just e-commerce, by the way. So they also started a cloud computing company, which I forgot to mention. So cloud computing, what's it called? I think it's called Alibaba Cloud. If I'm not mistaken, I think it's actually called Alibaba Cloud. So that was 2.1 billion of their revenue, 2.1 bill. 2.1 bill from cloud computing. That's pretty good number for the most part. Their profit growth was 40%. User growth was 8%. So Alibaba, again, they're growing their active user base. They're growing their revenue. Their cloud computing is growing at a rate of 100%. That was their rate last year, 100% growth, and it's still growing tons. It's still growing a lot. They have 550 million annual active users. Again, that's a ton too. So we're going to keep going here. Again, everything looks positive for now. So why is the stock dropping? We're going to keep going. So last quarter, earnings per share went down. So this is one of the reasons why the stock went down. So earnings per share, meaning essentially what this means, if you don't know what earnings per share is that profitability of the company went proportionally down. That's all that means. So profitability was down. So theoretically, revenue would go up. If your expenses go way up, greater than the revenue, then your earnings per share go down. That's what it means. So the earnings per share went down from 1.02 in 2017, and they went down to, what was the number here? 0.66 per share. As of June this year, of June 2018. And it was only, now they were expected to be less profitable, but they were expected to have an earnings per share of 0.74. It turned out to be 0.66, which is a decent, what's the word? They didn't hit expectations at quite the mark that they should have. But again, here's the other thing, is that they beat revenue expectations by essentially the same amount. So they exceeded revenue expectations, but decreased profitability expectations. So again, why is this stock going down? So that's one reason. And the reason why their profitability went down, actually, I should cover this. The reason why their profitability went down was because, let's see here, I've written it down here. So yeah, obviously they were investing. They were reinvesting a lot of their profits back into those three areas that I was able to find. So three areas: land. They bought tons of land essentially for data centers. Actually, that was their second investment. So they bought land for essentially retail data centers and essentially just trying to expand offices and warehouses. That's what it was. So yeah, data centers as well. So for the cloud computing, those data centers are very expensive. Can cost hundreds of millions of dollars to set one up, sometimes even billions of dollars. And for business acquisitions, they acquired 2 companies last year, I think, which was for a hefty price. I think it was somewhere around $1 billion. I actually didn't write that part down, but they acquired 2 companies last year. So the reason why their profitability was down was because they wanted to invest in the long term. And Wall Street doesn't like that. They like short-term profits for some reason. So that's that's a big reason why the stock is down. So another reason is because, I've talked about this in a previous video, is the Trump effect. The Trump-China effect. I think I talked about this in my last video, if I'm not mistaken, or one of my last videos, so Trump wants to put tariffs on Chinese manufacturers, about 25% tariffs. This would be bad news for Alibaba because stuff would be more expensive. Maybe they would have less buyers from the United States, take that risk. This would just hurt overall business for people, for USA buyers and businesses wanting to buy stuff manufactured in China. So again, they're worried that the tariffs are going to hit them. Maybe Trump goes for an all-out trade war and just, goes 50% tariffs or something like that. So that uncertainty in Wall Street is one of the reasons why the stock has not been performing well this year. Because Trump just keeps saying all the stuff about China and everything manufactured in China, everything should be here, made in the USA. Although I'm in Canada. Everything should be made in North America. And Canada, United States, or no, he doesn't like Mexico. He doesn't even like Canada anymore. Everything should be made in the United States. Yeah, so that's a big reason why the Alibaba stock isn't growing. Another thing too, I just want to quickly mention also is Jack Ma. So Jack Ma is the founder, was the CEO, and was the chairman of Alibaba for the last 25 years. I think it's been around 25 years or so. And so I think he retired as the role of CEO a few years ago, and then he officially just completely quit as chairman, or it might have those reversed. He completely quit, I think it was about a month or so ago. That didn't have too much of an effect on the company. I think the stock went down a little bit that day. But again, that's another reason why the stock is down too. So my opinion on this is actually, if you're betting on e-commerce in the future, if you're betting on e-commerce, so if you're betting that Amazon's going to grow, if you're betting on that Joisk, my company, is going to grow, if you're betting on eBay or betting on Wish or any of those companies, you should be betting on Alibaba, because Alibaba makes everything on those sites, except for, on mine, I've had some stuff manufactured there, and probably a lot of the stuff is indirectly manufactured there. So pretty much everything's made in China, right? So pretty much everything is from Alibaba for the most part. But if you're betting on e-commerce and small business and medium-sized business e-commerce and even large business e-commerce, bet on Alibaba, because they make everything. Again, yeah, if you're betting on Amazon, bet on Alibaba. Let's see here. Oh yeah, that's right. So I want to talk about some of the other companies they own, by the way, because yes, e-commerce is still the beef of their business, but they own some, Alibaba is the beef of their business, Alibaba.com, but they own some other businesses too. So they own things like Youku. And by the way, these are giant companies they own. Giant. Some of them are bigger in user base than Alibaba. All right, so Youku, I'm going to list these off here. Weibo, sorry if I'm pronouncing these wrong. Weibo, Alipay. Let's see. Taobao. Taobao? I don't know how to pronounce that. Taobao and Tmall. Okay. So these are 5 giant companies that they own. I'll kind of break down what these are. So Youku is essentially the YouTube of China. It's giant, hundreds of millions of people use it every single month. It's really big. I've stumbled upon that site a few times, especially back in the day too. I was like, Youku, what the hell is this? And it's a bunch of Chinese videos for the most part. But yeah, they own that. Youku is theirs. Weibo is the Twitter of China. If you haven't heard of it, it's strange because it has 400 million users, active monthly users, Weibo. So it's the Twitter of China. Alipay is the largest payment processor of China, and it's growing. So Alipay is like PayPal or Stripe, except in China, they own the biggest one. So it's like them owning PayPal for the most part, although Stripe is catching up. Stripe is a big platform. Taobao and Tmall are e-commerce sites with 500 million monthly active users each. I just dropped my marker here, part of my marker. So they own some giant companies that actually have near or more users than Alibaba. So they also own a bunch of digital media companies and tons of other companies too, but this isn't just one giant e-commerce platform. They own the cloud computing company too. They own lots of other companies that are smaller subsidiaries that are worth billions of dollars each. Maybe $1 billion, although apparently, billions of dollars each. But yeah, again, so they own tons of companies. What do you guys think of Alibaba? What do you guys think of this? I think that, in my opinion too, here's another thing to think about if you're investing in Alibaba, or if you don't want to, or if you do, is that, the GDP in China. So China has been a very fast growing economy over the past 20 or 30 years once they started introducing some sort of capitalism into the system. I think that was the 70s, and they've kind of been ramping it up the past 10, 15 years. But here's the thing: is that China is still, look at the essentially the wealth per person or even GDP per capita, still really low, like not even close to a lot of the developed world. And so again, if Alibaba is the main player in China for a growing economy, if they're able to get through the governmental problems and get through the Communist Party of China and the essentially it's kind of a half authoritarian regime they have there, if it keeps becoming a little bit more democratic, as we're seeing, it's very slow, I'd bet on Alibaba to keep growing. Alibaba is the biggest player in an still upcoming market, despite them being a giant economy right now. Are they the biggest in the world right now? Not quite sure. But again, they are a giant player of a growing economy. So if you expect that China over the next 10, 20 years or so is going to keep growing and keep getting wealthier and wealthier per person, as they have been showing over the past 20, 30 years, I'd bet on Alibaba. Alibaba is going to have more customers if they do that. They would own the entire e-commerce market. Like, I think that they own 60% of the e-commerce market in China. So imagine if people in China were as wealthy as they were in the United States. Alibaba would be a multi-trillion-dollar company. 2 trillion, they have 1 billion people there. If they were as wealthy as everyone in the United States and it was as big as Amazon, if we were talking about a $3 trillion company or more. So that's my opinion. But also, again, those are obstacles. Those are not easy obstacles to get over. I mean, we've seen that the Communist Party in China is kind of cemented in there. They're restricting Google, restricting access to certain parts of the internet. They don't like some cultural things that go along. They don't like some religion stuff that goes on there. So again, that's a big hurdle to get over. If you think that China is going to keep getting wealthier, I'd bet on them. I'd bet on Alibaba. And if you don't think that China is going to keep growing as an economy, then don't bet on Alibaba. That's another opinion. So I think that's going to kind of wrap this up here. And so my overall conclusion here is, as a 1 to 2 year investment, because Trump's in office and wants to keep taxing essentially Chinese goods, it might not be a good 1 to 2 or even 3 or 4 year investment. Maybe if he's in office for another 4 years, maybe he might not, maybe he wants to keep putting higher tariffs on them. It might not be a good investment for 5, 6 years. They might be stagnant, might be a little bit of growth, maybe a little bit of a downturn. But in my opinion, if you're to hold on to Alibaba and they were to keep innovating like they are, they have proven to be an innovative company. As a 10-year investment, I like them. And I don't like tech companies for the most part. I don't invest in a ton of tech companies. As you guys, if you were in my course last year, when I was investing in, a lot of my investments were essentially in very steady, dividend paying stocks. And then about 20% of my portfolio, I think at the time about 25% was Amazon, which I had a good return on, and Google. And I think I made one more. But for the most part, as a tech stock, as far as tech stocks go, I think this one's kind of a little bit undervalued right now, based on essentially Wall Street fear and Trump fear for the most part. So again, what do you guys think of Alibaba? Let me know. Again, oh yeah, I should mention this too. If you want to invest in Alibaba, it can be a little bit of difficult because there's some restrictions too that happen when investing in a Chinese company, especially if you're in the United States too. Might be actually a little bit difficult to invest in them. So what you could do is go through a back door, invest in a kind of a Chinese e-commerce index fund. There are some of those out there. So they might invest in Alibaba and I think JD, I forget if they're on the stock market, but there's a few e-commerce companies in China which you can indirectly invest in through an index fund. So again, I should have just mentioned that before actually, was that it's tough to invest in individual Chinese stocks sometimes. So what do you guys think of this? What do you guys think of this? What do you guys think of Alibaba as a whole? I think as a company, good company, proven to innovate, they're profitable. I know, again, it's like everyone's so down on them. They're profitable. They've been profitable for a little bit and they're in a growing economy. I would be now saying that right now might not be a good time to buy stocks as a whole for the most part, because it might be at its peak, the stock market. Maybe we see a recession soon. We should be at the end of an economic cycle. Probably not a good time to buy stocks right now. However, Alibaba as a company and as an undervalued company, in my opinion, it would be a good thing to at least look at if I were an investor in the tech sector. So I'd like to thank you very much for watching. Also, if you guys haven't heard, I have a vlog coming out where essentially what I'm going to be doing is every week or two, I'm going to be trying to start a new business through my company called Joisk. Joisk is my own e-commerce marketplace that I have built and I'm still building, still have a long ways to go. But I'll be trying to start a new business every week or two through Joisk. So next week, I'm going to be trying to do t-shirts. I'll be talking about from buying the t-shirts wholesale to making them, to building the logos and advertising, and all to the point essentially where you can get like the first sales come in. That's what I'm going to be try to vlog here. So I'm going to, because a lot of people online, they talk about, oh, I built this business 2 years ago and here's how I did it, but they kind of fudge the stuff. I'll literally be documenting how to go from start, not knowing anything, to actually making sales and having it be an actual business. So I hope you guys will like that. I'm going to put in a lot of effort into that. So thank you very much for watching. Remember, hit the subscribe and like button down below. You are all very beautiful people. I'll see you guys in the next video.